This really is the first innings of the new internet paradigm.
All right, welcome to Talking Investing, and today we are lucky to have Sue Ennis here with us from Hut 8. So she's returning to the channel. We had a nice conversation a while back, but a lot has happened since then. So I got some good questions for you. There was some stuff you weren't yet allowed to talk about the last time we discussed. There was some things on the brink of happening, so I'm excited to hear what's going on. So you want to just introduce yourself to, I'm sure everybody knows you, but...
Yeah, absolutely. So thank you so much for having me on. Love your channel. My name is Sue Ennis. I'm VP of Corporate Development at Hut 8 Mining. We're one of the oldest and largest digital asset miners in the world, but we're now getting into the data infrastructure, Web3 infrastructure space, and effectively creating the Amazon Web Services for Web3, all things Web3, blockchain gaming, and a tier 0, aka digital asset mining, to tier 3 high performance computing infrastructure platform. So really excited to be on here today talking to you guys about it. And yeah.
Well, I'm glad you started with that, because I will tell you, I've been looking into this, and you guys were just doing this acquisition the last time we talked, so we didn't get to go too in depth about it. So I've read through your presentation, your investor presentation and all that. Like, investors, even myself included, we're still trying to learn. Like, you just threw some words out there and talked about this. This is really a new area. And, you know, I was reading your investor package, and it talked about the total addressable market. They're expecting to be $11 trillion by the year 2030. So this is not a small thing, but I don't think investors yet really totally understand the scale of what you guys are doing here.
Sure. So I think Hut 8, we really look at ourselves as infrastructure pioneers. So before Bitcoin mining was popular, we were one of the first large enterprise scale Bitcoin miners in North America in 2017. And then we went public in 2018. So we were one of first to market with that infrastructure piece to this network, okay, in North America. And so now, as the Bitcoin blockchain and just industry in general has continued to grow, we see the next iteration of this entire new financial and web paradigm. We see the next stage of that is evolving into a deep need for infrastructure services around the Web3 paradigm. So what do I mean when I say that? Regardless of whether or not, you know, you're a Google or Facebook or a blockchain game or a Solana layer 2 alternative, you need data storage, you need security, you need disaster recovery, you need backup, you need digital render, especially if you're a blockchain game or just a regular game creator. And right now we're seeing an incredible dearth of offering and support for companies in the Web3 and blockchain gaming space from the traditional data center guys offering those services. So right now there's only 3 players in North America that are offering all those that suite of services I just mentioned. There's only 3 players in North America offering it at scale: Equinix, Switch, and Amazon Web Services. All 3 of them are housed in Arlington, Virginia. About 95% of their centers are in Arlington, Virginia. And so as a developer, as a company in this new space, in this new paradigm of the internet and financial services, I'm incredibly centralized in terms of who, you know, there's only one of 3 sort of monopoly players I can choose from. The problem too is that these traditional data center guys, they don't know open source and distributed systems. They're not always comfortable with it. So sometimes projects will get dinged from a compliance perspective. The level of compute that these projects run on their machines in-house is much different than, say, I'm a bank storing my customers' data in their warehouse, in their storage. And so oftentimes they get charged crazy SaaS-based pricing for really what is really just basic bare level compute. And then number 3, just in general, these traditional data center providers don't understand the industry or aren't comfortable with it the way, again, that Hut 8 has been, and we have been innovating in since 2017, 2018. So this is sort of the natural next infrastructure evolution that we're seeing and that we're supporting, and we're one of the first movers to do this. And yeah.
Yeah, and I think none of your peers have really moved into this space yet. And you know,
Not at all.
You mentioned Amazon, so I think the whatever the existing or previous version of this is, they're the dominant force in that, I think, right now. So this would be moving to a new generation, I guess, is to put it in layman's terms.
For sure. And the reason why, there's a couple of reasons why none of our peers have done this yet. Number one, from an infrastructure perspective, they can't. Versus we've been effectively making purchases with this type of move in mind since last year when we bought our cutting edge, basically Ferraris of Nvidia GPUs. And also, it's also because Jamie, our CEO, she's not a private equity guy. She's not a former banker who's gotten into mining. She's a data infrastructure engineer. She's been doing that for 20 years in the traditional data center space. So she's the gal that BlackBerry, IBM, Cogeco have called in when there's a transformation mandate from a data infrastructure piece that needs to happen. And so she actually knew about these data center assets long before she even got hired at HUT. So my point is, when you look at the management team of a company and you think about how is the management team going to get there, what is their expertise? This is her wheelhouse. This is her original bread and butter. And so she's able to see opportunities a lot differently than perhaps other operators in this space are. So.
Okay, yeah, you had mentioned that Jamie had that kind of background, and you guys have been talking about this internally a lot longer than we've known about it on the outside. So my question would be, is this going to be a bigger and bigger part of your puzzle, or is this going to one day be equal or greater than the Bitcoin mining? I know you guys consider yourselves a Bitcoin miner, and that's important.
Yeah, and that's important, and that's a very core piece of our business. But we don't think that growth and our stake in the sand in this industry starts and stops at mine, Bitcoin, and HODL. There's so much more that's being built, so much more momentum and adoption that, again, we want to make sure that we continue to grab market share and be first movers. And effectively, we're looking at it as every dollar invested into HUT is a dollar that's reinvested back into the growth of the blockchain and Web3 and just entire industry, because that's what we're supporting with this infrastructure. So in terms of outlook, for this year, we plan on growing that piece of our business by 15 to 18%. The industry average for the data center space is about 10 to 12% annual growth. And then, long term, like 5 to 10 years from now, we absolutely foresee, because this is still early stages, right? We're still in the beginning innings. Like the metaverse is not here. The metaverse is 5-7 years away. So
I'm glad you said it, because
Oh yeah, no, but it's coming. Like it is coming. Web3 is coming, and Web3 obviously isn't just the metaverse at all. But 5 to 7 years from now, which is the lens that we're taking, is that we're going to be one of the first and only full high performance computing platforms, 50% high performance computing and 50% mining. And that's going to be a major piece. That full service HPC platform is a major part of who we are and how we want to participate in this industry.
It seems like to me, I was looking at the amount of power usage that your data centers take, and you guys have a pretty big relationship with power companies, and obviously the Bitcoin mining takes an awful lot of power, but it looks like the data centers, in comparison, I think it was 4 megawatts maybe.
Yeah, it's total 6 megawatts that we've got across 5 data centers. And that just speaks to sort of the difference of high performance compute and why, any Bitcoin miner, you can't just be a Bitcoin miner and then pivot to data centers, because it's a completely different power profile, completely different infrastructure profile. This isn't something that you can organically do unless you do a proper acquisition the way that we've done, and also start building up your machine inventory and equipment with this sort of thing in mind. Because the power profile is completely different. So even, for example, the Ferrari of GPUs that we bought last year to mine Ethereum to get paid out in Bitcoin, and the servers that they sit in can be repurposed to machine learning and AI, which again are services we're going to be offering. 10,000 of those GPU Nvidia miners take up about 2.5 megawatts total of power. 10,000 ASIC machines is like at least 35 megawatts. Like it's the power profile is completely different. So yeah.
But are you able to utilize your power relationships? Because it seems like, if that's even if you had to turn 4 into 40, you could 10x that at some point. Obviously I know that's not happening in the next 12 months, but in a 5 to 10 year plan, it feels like you guys are already set up to grow that. And then that also does, it sounds like you answered one of my questions, the 10,000 GPUs that you guys have. So their final destination is in the data center. Is that?
Yeah, ideally, that's how we're looking at it. So again, this isn't so we have traditional data center clients. Okay, so we've got 400 enterprise clients. It's incredibly sticky, recurring cash flow and revenue. It's uncorrelated to the digital asset mining space. So that's one thing that we really liked about it. And it's also a piece of a business that we can continue to grow as because the market demand for data and storage and infrastructure in general and co-location is growing big time. The 40% excess capacity in these data centers, we're going to be filling, like I said, with the Web3 services and support, and also the GPU miners. So anytime a customer isn't coming in and using our infrastructure for their own high performance computing needs, we just flip our GPUs back on and mine Ethereum and get paid out in Bitcoin.
Okay, good. Then that you're getting to my questions before I ask them, so that's good. Have you yet started to use those data centers to do any mining? So that's already happening.
Sorry. Have we started yet? You know what? I actually don't know if those miners have gone in yet. We're actually doing an analyst and investor day in September where we're going to show you guys the miners in with the data centers. I don't know the status of them getting in now, but I can tell you that we have customers. I mean, the 400 existing customers, we also have signed our first customer, which is EGLX, Enthusiast Gaming. They're one of the largest gaming companies in North America with over 300 million gamers. And they are now using our infrastructure for one of their blockchain games that they've come out with.
Nice. So I know Jamie on the call mentioned that like the ASICs are not really compatible. You know, you can't just combine, your high performance computing with it's just total different platform, and
it's totally different platform, totally different power needs, totally different cooling needs. But that's what we love about this move is we now have a tier 0 to tier 3 high performance computing platform. And the barriers to competitive entry are so high. Like I said, you can't just turn a Bitcoin mining infrastructure into a data center. That's not possible. And you can't, like vice versa, it's not possible. So we've done very thoughtful inorganic growth with, again, a 5 to 10-year horizon as to how do we become effectively the Amazon Web Services of Web3 with that like Kinross gold piece to it, AKA our Bitcoin business.
Right. So that's interesting because I really feel like I know stock price isn't something you probably talk too much about based on regulations and all that kind of stuff, but I don't feel like your stock has this priced in at all. I don't think people understand this yet. I almost half include myself in that group, so I'm glad I'm getting a chance to talk to you about this face to face because I'm learning more about that, and I'm trying to put the pieces of the puzzle together, and some of this I do think is 5 years out or 10 years out, but if you're building the infrastructure now, this actually sounds even bigger than I thought it was.
For sure. Well, and also not only that, but this isn't an idea that's been scratched on the back of a napkin. These data centers already have recurring, stable cash flow, period. We have a cushion to build and innovate and go, like, because this is set up. We've got the customers, like we're good to go, and grow. So, and yeah, you're right. It is. I mean, we only just released our projections for this side of the business, like at the beginning of May. We are also in a bear market. Right. And again, I do think that, not to keep using the Amazon example, but Amazon was once trading at $9, like I don't like the market hasn't fully figured out the significance, I think, of not only Web3, but also just the importance of infrastructure to support where this new paradigm of the internet is going. But again, that's why we look at ourselves like innovators. Like we were one of the first miners before mining was popular. So, and we just want to continue that sort of trajectory.
So with the 10,000 GPUs that we think we're gonna end up over in high performance. Right now they mine Ethereum. Do you guys have any further thoughts on where there's this allegedly we're moving over to a proof of stake at some point in the unknown future? Do you guys have any target for that, or?
So, I mean, they've been talking about moving to proof of stake since 2017, since I got into the industry. But look, I do think it's going to happen. I mean, they've made some significant testnet merges and upgrades that we haven't the momentum of proof of work to proof of stake going forward is continues, and I do probably think will come here. I think what's really interesting is, this isn't a technology issue for Ethereum, it's a governance issue. And I think, we're in a bear market. Also, if you look at what's at stake for Ethereum, their developer community, being the second largest by developer activity chain out there. um, there's a lot of risks moving from proof of work to proof of stake, and there's a lot that's at stake, no pun intended, for them. So do I think it's going to happen? Yes. Do I know when? No. Or do we have an outlook on when? No. I mean, they've obviously said the fall, but there's so many nuances from a governance perspective that it wouldn't surprise me to see this pushed out again to 2023. And what's also interesting is this move from proof of work to proof of stake is really focused on the environmental aspect of Ethereum, and it is, like, I think it's 99% more friendly to the environment, going to proof of stake. But all of the actual problems with Ethereum right now in terms of transaction fees and scalability and speed isn't going to be solved until the network does its next upgrade into sharding and into shards. And that's also not forecast until 2023, 2024. So that was a really long-winded answer, but I don't know. I don't have an outlook, but it wouldn't surprise me if it was pushed out again.
Yeah, I mean, it's been a series of delays, but it sounds like you guys think it is going to happen. It's just a matter of how long it takes them.
Yeah.
So with the GPUs that you guys bought, I mean, I'm doing the math in my head. It's that they got to be getting pretty close to have already paid for themselves just with the mining they've done.
Pretty close, for sure. Pretty close. Again, what's really awesome is 15%, at least last month, of our monthly production. And sorry, May's numbers should be out shortly, but 15% of our production in April was done at less than $3,200 Canadian per coin. So we do not hold Ethereum on our balance sheet, period.
Right.
And we don't mix with the currency conversions or anything like that. We mine with Luxor Mining, and then Luxor Mining spits out Bitcoin to us, and we put it on our balance sheet. So that's how it works. And it's, again, just lowering that cost per coin as well, plus the ability to diversify and not be single threaded with our fleet, has been tremendous, and again has helped us with our growth trajectory.
So that leads me to my next question. You guys right now, I mean, you're the original hodlers. I think you invented the concept. And it seems like up until, I don't have your May update yet. We're all waiting for that. But you've still been 100% hodling. Is that your going forward? Do you guys anticipate to continue to do that? Or given this bear market, is that going to have an effect on?
I mean, never say never, but we're not in a position right now where we need to sell coin, because we've been around for so long. We've already been through 2 bear markets. This is not our first rodeo. And we've been managing our balance sheet throughout the bull market with the bear market in mind, because we know how fast it can come, versus I think a lot of these new entrants didn't think it could come so fast or come so hard, or anticipate some of the nuances that come with bear markets. So my point in saying that is we're a lot more sort of agile than I think a lot of other players out there right now. Having to sell Bitcoin is not something right now that we feel that we need to do. And we also, we do believe in the upside and price appreciation of this coin. If you look at, if Bitcoin were to capture 2 to 3% of gold's market cap in an institutional or pension plan's portfolio, that's an incredibly accretive price per coin. If you look at sort of the growing need for a government agnostic global payment rail, there's a need for Bitcoin, right? So if you look at a spot ETF eventually being approved, that would also be incredibly accretive to the price. So, and plus adoption in general is on a tremendous upswing regardless of this bear market. So
do you guys think that ETF is inevitable? I mean, in the US, it seems like they have just been doing everything they can to delay. But is that an inevitability?
I think delay is better than no, right? Like regulators can just say no. But what they've done with Grayscale is, I believe it's poll your audience, see what the people say, get them to sign a petition. At least I thought that's what I read somewhere and I've been hearing. So that, to me, Sue, I think that's an interesting dance that Gensler's doing, because he could have just outright said no and denied it the way that other spot ETFs have been denied before. So I think it will come eventually. It's going to take some time. But again, we almost have 7,000 Bitcoin on our balance sheet. All of it is self-mined. We didn't buy any of that in the market. We think we're in a good position to benefit if that happens.
Okay, so I know you mentioned 7,000, and I'm guessing you're either going to be there or just on the cusp of that with your May announcement. So I'll give you congratulations on that ahead, and if it's another month, well, then it'll be next month. But I have two things that most of I feel like my viewers, which are mostly cryptocurrency investors and specifically the mining companies, they seem to have two main concerns, and it's this crypto winter, if you will. So I know we're in a crypto bear market, and some of these terms are loosely defined. Do you guys see this getting worse and moving into, for Bitcoin, a crypto winter, or do you see like we're bouncing along the bottom here? And
I think we're bouncing along the bottom. I think we probably have a little bit more pain to feel as we haven't gotten inflation under control. Rates will continue to have to rise. And unfortunately, Bitcoin now trades like a long tech equity, and long tech equities do not do well in a rising rate environment. So I think it's going to be a little hairy for the next 12 to 16 months until things get a little less hot. From an inflation perspective, we also see, rates rising in Europe, New Zealand, Canada. We just rose rates yesterday morning. So it's going to be hairy for a bit, for sure. And we do think that a lot of miners are going to lose their shirt. We do think that those who prioritize balance sheet over, let's say, paying top dollar for equipment that's now worth like 50% of what you paid for last spring, we think those guys are going to survive, and we're one of them. So, it's going to get hairy, but last crypto winter looked a lot different than this crypto winter or this bear market. And why I don't think it's going to go into crypto winter is because the amount of institutional players that are participating in this space, things like Stripe partnering with Shopify for Lightning payments, Visa, MasterCard. You have, more and more US states becoming more accommodative to miners and just to innovation in the crypto space. Brian Brooks took over Bitfury. Like, there's a lot. This is a lot different than last crypto winter. From an adoption and an understanding perspective as to the significance of this technology. So, Sue, me personally, I don't think we're going into a winter.
Okay. Well, I don't either. I didn't want to bias you with my opinion, but I've said on my channel, and I've done a couple of videos, it just doesn't feel like Bitcoin's moving into that environment. I know the altcoins, some could argue are already in a little bit of a crypto winter, but Bitcoin's got its own trajectory. So, even if you guys have, it sounds like you're ready for a 1 to 1.5 year bear market anyway, or bouncing along the bottom. Can you guys hodl through that whole process, do you think? Because that, to me, that would be, and this is a big point of contention. I know some people want, their miners to spend their Bitcoin, but at 30,000, I don't think this is, you've been holding it for all these years. I don't think the plan was to sell it at 30,000.
Yeah, I mean, look, I can't say what the future holds, but I can certainly say, like I said before, like, we've set ourselves up for success because this is not our first rodeo. This will be our third bear market, and we've learned a lot from the past two bear markets. We certainly see opportunities to go shopping. We have an unencumbered stack. So, last bear market, we actually were able to take out a loan against our stack in order to survive. So we're incredibly agile. We're incredibly bullish on the future price appreciation of Bitcoin. Again, we're incredibly bullish on the future demand and need for infrastructure in the growth of this ecosystem. Also, I think everyone needs to remember bear markets aren't always a bad thing. Yes, they hurt, but DeFi and NFTs were born out of the last bear market. Like, actually good things happen. Developer activity still continues. Innovation still continues in bear markets. And that's what makes bull markets even all the more exciting and bullish, right? Because people come flying out of the gates with all this, they've been strength training during off season. So,
right.
And again, that's how Hut 8 is looking at it. We're like, awesome. We're comfortable right now, and we now have a new business. We're going to be heads down and continue to grow while we continue to mine profitably. And yeah.
Well, I know Jamie mentioned on the call that you guys have been waiting, patient. I think she said you've had patience in regards to buying more ASIC machines. And I know a lot of people were frustrated as all these other companies were, having their gigantic press releases and all that kind of stuff. It seemed like you guys were in a bit of a holding pattern, but now, now looking at it from my perspective, it seems like that was intentional, and you guys kind of
Good.
had a feeling that, and she even went as far as to say she didn't think we've reached the bottom in the price of ASIC miners. So
Oh, and guess what? We didn't pay 90 to 120 bucks per terahash last spring. Those guys who paid it and Bitcoin now trading where it is, and you've still got to pay those machines off. We think there's going to be even further yard sales. And so we're ready to go shopping. We are incredibly, again, and that's why I cannot stress enough. This is the benefit of being one of the oldest guys. It's because you see things differently than sort of the bull markets, players who have never actually survived a downturn or seen the opportunity to go shopping when there is a downturn. And again, keep that balance sheet strength intact. So
it was a calculated risk, but right now, in my opinion, it looks like it was genius because your things have played out the way where your balance sheet is. I mean, I've kind of broken it down on the channel. You guys have an incredible balance sheet and virtually no debt. So, you're in a
it very seriously.
yeah, and I can see that, and I think you were looking for 6 exahash by the middle of the year, and you guys pushed that off,
Yeah,
which frustrated some people. But was that all a
absolutely.
part of what's going on right here?
Yeah, I mean, again, we prefer to, you guys should know us by now. We're very conservative. We prefer to sort of under promise, over deliver. And yes, this is a very choppy market. So we want to make sure we're paying the right prices at the right time. We also think there is going to be some opportunity for inorganic growth. So we felt comfortable pushing that side because again, everything is going so well in terms of our business. We just want to make sure that we're being slow and steady and not missing opportunities in this bear market.
So are you guys still planning the 6 exahash at the end of the
Yeah.
year, or and can we consider that flexible based on movements in the market, or that's still your
Uh,
goal right now?
I think right now that's our goal. For sure, we always love to set ourselves up to surprise on the upside if we can. But for sure, right now, I'd say that's a goal that we're comfortable communicating with you guys.
Okay, and so are you going to be buying ASICs on the spot market? I mean,
No, we'll see. We'll see. We've got our pulse on pricing. We've got our pulse on pricing. It's dropping every day,
I
which we love to see.
I
So yeah.
I feel like if I'm reading between the lines that there's the potential for, when you say inorganic growth, is there potential for further acquisitions in this space?
I
Or
mean, listen, we said that in our M&A even last September, increased M&A is certainly something that we are looking at and considering if the opportunity is right. I'm going to be honest with you though, because of how some of the other miners' balance sheets were managed, we don't particularly see a ton of ideas that we love just yet if they were to go on sale. Again, we want healthy businesses, and a lot of the bull market behavior wasn't. Um, I think it remains to be seen sort of who's going to be the palatable potential player to pick up, but it's on our radar. Everything's on our radar. That's how we like to stay agile.
so do you feel like some of these people, maybe versus mergers and acquisitions, are ultimately maybe the potential for just an asset acquisition at a discounted rate based on?
Possibly, yeah. Who knows? Possibly.
Okay.
Still remains to be seen, but as I've said a couple of times now, the focus for Hut is on balance sheet strength, on being able to be agile, being able to be nimble, so that we can drive in this market, and the market isn't driving us. That's how we like to set ourselves up.
One more thing. I'm not sure if you're going to be able to address this or not, but I can tell you the other biggest comment that I get continuously, and I think it's as a function of the fact that Hive just did effectively in a reverse stock split. So,
Mhm.
on basically in comments on the channel and in my Discord, seems to be an awful lot of people that are afraid that others will follow down that path. So I don't know if that's something you're allowed to even talk about, but is this a conversation at Hut 8 or?
Okay, so I certainly cannot comment on that. But look, like, um, yeah, there's no way I can comment on that and
I
keep my
understand.
job. But like, I would say that again, if you look at how we've been running our business, I think we've shown shareholders that we're pretty responsible, pretty conservative. I'm not even saying Hive wasn't responsible or conservative. I'm just saying, like, you know, we've got a lot of agility in our business to be in the driver's seat with a lot of things.
So the data center is kicking off cash for you guys. Is that one of
Yeah,
the things that's,
yeah,
so in a bear
stable,
market,
totally uncorrelated, stable, sticky cash flow. No matter what Bitcoin is doing or digital asset mining dynamics, we have stable, sticky, recurring revenue with this completely uncorrelated business now.
all right. Well, I can tell you, I've been doing a little series on my channel, who's most likely to survive a crypto winter if it happens. And I preface everyone with saying I just don't see a Bitcoin crypto winter. I do
Yeah.
acknowledge we're in a bear market, but I don't see a winter. But as I break things down, I will let you know that you guys ranked number one
Oh,
in your
amazing.
ability to survive a crypto winter for all the
Oh,
reasons that you
amazing.
talked about.
I actually haven't seen that video. I'm gonna watch that video. That's awesome.
Yes, it's I only in my original video I only mentioned one. I said I'm going to give one spoiler alert. Hot 8 I think is the one most equipped to
Awesome.
survive. So that's
Awesome. Thank you.
my opinion from from the sidelines.
Yeah. Well,
Is there anything else that you want to let the investment community know or the public?
yeah, I think just, you know, I'm really excited to show you guys what we do with this HPC business. Like, this really is the first innings of the new internet paradigm. And again, how we look at it is we're not betting on who the Web3 racehorse is going to be, because everyone's running on our racetrack. Whether you win or lose in Web3, you need the infrastructure that we're providing. So I'm really pumped to continue to share this story with you and have you guys sort of follow along and see what we can do with this, because pioneering is what we've done. We started Bitcoin mining before it was popular, and now this is sort of the next iteration of where we think we're going to put our stake in the sand. So,
All right. Well, thanks. I think you've answered a lot of our questions, and that was helpful. And hopefully I'll have you on again, because I know
yeah,
that I continue to try to learn about the high performance computing side of this. I think you've helped to clear this up, but I will always have more questions.
thank you so much. Pleasure speaking with you.
All right. Great. Thanks for coming on, Sue. I really appreciate it.
Bye.